You know that feeling? You work those extra hours, really push yourself, and then, well, taxes take a pretty big bite out of that overtime pay.
Oh, yeah. It can feel a bit deflating sometimes.
Exactly. But hey, welcome to the deep dive. We got something interesting today, a new tax provision focusing on overtime pay. It's slated to start in 2025.
That's right. It's definitely caught some attention.
So our mission for you today, okay, let's unpack this thing. What does no tax on overtime really mean in this context? Who actually gets this benefit? We'll dig into the source material.
Yeah, and it's a really specific change. It could make a noticeable difference for certain people's take-home pay, which is always interesting to see in tax law.
It really is. Okay, so let's get right into the core of it. The source calls this an above-the-line deduction for overtime premium pay. Now, above the line, that sounds like tax speak. What does that actually mean for someone listening? Why is it important?
Right. So above the line is pretty significant. Basically, it means you deduct this amount before you even calculate your adjusted gross income, your AGI.
Okay, before AGI. And why is that the key part?
Well, because your AGI is often the number used to figure out if you qualify for lots of other tax breaks, credits, other deductions. So reducing your income before that number gets calculated can, potentially help you qualify for more benefits elsewhere. It's like getting a discount on the discount in a way.
Ah, I see. So it has a potential ripple effect. Got it. And it's specifically for overtime premium pay. The source points to Section 7 of the Fair Labor Standards Act. So this isn't just any extra hours someone works.
No, exactly. That's crucial. It's only the premium portion. So think about time and a half.
Right.
Is that extra half part. The amount you earn over your regular hourly rate, specifically because it's overtime, as defined by that federal law.
Just the extra bit, not the whole overtime wage.
Precisely. Just the bonus part, you could say. It's very targeted. Seems designed to reward that specific type of federally mandated overtime.
Okay, makes sense. It zeroes in. But who gets to actually claim this deduction? Because the source is also pretty clear about who doesn't qualify.
Yes, very clear. It says taxpayers who are highly compensated employees are ineligible.
Highly compensated. What does that mean practically?
Well, it usually refers to a specific income level set by the IRS.
Yeah.
The source mentions the threshold under IRC Section 414Q1BI. That number changes. They adjust it annually. So basically, if you earn above a certain amount, this deduction isn't for you.
So there's an income cap.
Right.
Keeps it from benefiting the highest earners.
Exactly. And just as important, you need a work-eligible Social Security number to claim it.
Okay, so you need the right SSN status. That's a key requirement too.
It links the benefit directly to those authorized to work and pay taxes here.
Got it. So specific income bracket, specific SSN, and I noticed something else. This isn't a permanent change, is it?
Correct. That's a really big detail. The deduction is only allowed for tax years 2025, 2026, 2027, and 2028.
Just 4 years? Wow.
Yep, 2025 through 2028. It's temporary.
Any idea why just 4 years is like a trial run?
Could be. Maybe policymakers want to see the economic effects before making it permanent. Or perhaps it's tied to a specific short-term economic goal. It's definitely not baked into the tax code forever, at least not based on this.
Interesting. Okay, so that temporary nature is really something you need to keep in mind for planning. So let's bring it back to the listener. What does this all mean for you? How do you figure out if this actually applies to the money you earn working those extra shifts?
Well, if you're an hourly worker and you often get that time and a half overtime,
Yeah.
and your total income is below that highly compensated line, which, again, you'll need to check the official IRS numbers for those specific years.
I check the official figures.
Then this could directly boost your paycheck. Think about it. For that extra half-time pay, you might keep, say, an extra 20 or 30% of it, depending on your tax bracket, instead of having it withheld for taxes.
So that could actually add up over the year.
Absolutely. If you work regular overtime, it could mean hundreds, maybe even thousands more in your pocket over the course of a year, just during this 4-year window. If the tax hit on overtime ever made you hesitant to pick up extra hours, well, this might change the calculation for you between 2025 and 2028.
Okay, so let's recap quickly. We're talking about a temporary 4-year tax deduction starting in 2025. It's specifically for the premium part of overtime pay. And it has clear rules. You can't be a high earner, and you need a work-eligible Social Security number. Definitely something to investigate if you're an hourly employee working overtime.
For sure. And maybe just a final thought to chew on. Thinking bigger picture, what does a temporary measure like this signal, about how policymakers might be thinking about work incentives in the future?
Or how might it influence your decisions about working extra hours, specifically during those 4 years, knowing this deduction is there?
Exactly. Something to consider beyond just the numbers.
Definitely food for thought. Remember to look up those official income thresholds as we get closer to 2025. Thanks for diving deep with us today.